If you are receiving CPP, OAS, or GIS right now, there is a very real chance that your payments could stop. Not slow down, not be reduced, but stop completely. And the reason it happens to thousands of Canadian seniors every single year has nothing to do with eligibility. It has nothing to do with a change in the law. It happens because of something simple that was not done on time. And right now, in the final days of April 2026, you have a matter of days to make sure it does not happen to you. The Canadian government has officially confirmed that there are steps every senior receiving these benefits must take before April 30th. The programs specifically named in that government announcement include Old Age Security, the Guaranteed Income Supplement, the Canadian Dental Care Plan, and the Canada Disability Benefit. April 30th is a Thursday this year. There is no weekend extension. There is no grace period. The deadline is the deadline. What I am about to walk you through are 5 specific actions, with the exact numbers and exact steps that protect your income before that date arrives. The first action, and the single most urgent item on this entire list, is filing your 2025 income tax return before April 30th, 2026. Before anything else, understand why this matters so specifically for seniors. Your guaranteed income supplement is not calculated once and left alone. It is recalculated every single year by Service Canada. The renewal for the benefit year, running from July 2026 through June 2027, will be based entirely on your 2025 income tax return. If that return is not filed before April 30th, Service Canada does not have the data it needs, and when the data is not there, they do not guess. They do not hold your payment in reserve. They stop it. GIS suspension is not a rare administrative edge case. Now think about what that means in real dollars. In the first quarter of 2026, the maximum monthly GIS for a single senior receiving full OAS is $1,874 per month. Combined with the base OAS pension of $742.31 for seniors aged 65 to 74, a low-income single senior can receive over $1,850 every single month. That income is entirely tax-free. It covers food, medication, heating, rent, and the monthly costs of living that do not pause because a government file is incomplete. If your GIS is suspended because your tax return was not submitted on time, you could lose more than $1,100 every month until the situation is corrected. For a senior on a fixed income, that is not an inconvenience. That is a financial emergency that can take weeks or months to resolve. If your income comes primarily from CPP, OAS, or a small pension or investment income, you may qualify for the CRA's Simple File service. This free program from the Canada Revenue Agency allows eligible Canadians with lower incomes to file their taxes by phone or online with minimal steps. The Simple File service opened on March 9th of this year. If you received an invitation through your CRA My account or in the mail, you can use it right now. If you were not invited but believe your tax situation is straightforward, visit the CRA website to check whether you still qualify. The Community Volunteer Income Tax Program, known as CVITP, is another completely free option. Trained volunteers across the country help eligible seniors and lower-income Canadians file their returns at no charge. Many of these clinics are still open and operating in April. Call the CRA at 1-800-959-8281 or visit canada.ca to find a clinic near you. These resources exist for exactly this situation, and there is no reason to let April 30th pass without using them. One more thing. Starting July 2025, the lowest federal income tax rate dropped from 15% to 14%, making the effective 2025 rate 14.5%. You may owe less than expected, and late penalties starting May 1st will cost far more than any balance owing. The second action every senior must take before April 30th is confirming that your personal information on file with Service Canada is current, accurate, and up to date. This means your mailing address, your direct deposit banking details, and your contact information. The April 2026 OAS and GIS payment is scheduled for April 28th, 2 days before the tax deadline. If your banking details are incorrect or outdated, that payment will fail. If your mailing address has changed and Service Canada was not directly notified, a paper check will be sent somewhere you no longer live. Recovering a failed or misdirected payment takes time, and for a senior who depends on that deposit to cover rent, utilities, or prescriptions at the end of the month, waiting 2 or 3 additional weeks is genuinely harmful. Here is what many people do not realize. Service Canada does not update automatically when you move. Service Canada does not update automatically when you change banks or open a new account. Even if you notified Canada Post of your new address, that does not transfer to Service Canada's records. The system depends entirely on you providing that information directly. If you moved in the past 12 months, changed banks, or updated your banking details anywhere, you need to verify that Service Canada has the current information. You can update your information online through your My Service Canada account by calling Service Canada at 1-800-277-9914 or by visiting a Service Canada center in person. If you need help navigating the online portal, a trusted family member, a caregiver, or a staff member at your local office can assist you. This takes minutes and can prevent weeks of disruption. While you are in your account, take a moment to verify your current payment amounts. For the second quarter of 2026, covering April through June, OAS increased by 0.1%. This follows the 0.3% increase applied in the first quarter of January through March. Over the past 12 months, OAS has increased by a total of 2.1%. These increases are automatic for current recipients, but if you recently enrolled or if there have been any changes to your file, confirm that your payment amount reflects the current rate. The third action is to review your GIS eligibility in light of any changes to your income in 2025. This deserves its own focused attention because many seniors are either not receiving GIS at all when they qualify, or they are receiving less than they are entitled to because a change in their income was never properly reflected in their benefit amount. The Guaranteed Income Supplement is a non-taxable monthly payment available to low-income seniors who are already receiving old age security. As of the current quarter in 2026, a single senior can receive up to $1,874 per month in GIS on top of their OAS. To qualify as a single senior, your annual income, not counting OAS itself, must be below approximately $22,000. For couples, the income thresholds are different and depend on whether both partners are receiving OAS. If your income in 2025 was lower than it was in 2024, you may now qualify for GIS at a higher amount than you are currently receiving. This can happen for many reasons. Perhaps you fully retired and your employment income stopped. Perhaps a part-time job ended. Perhaps you had a one-time investment gain in 2024 that did not repeat in 2025. Perhaps you lost a spouse and your household income changed significantly. In any of these situations, your 2025 income may put you in a position to receive more GIS than you are currently being paid. But Service Canada can only make that adjustment after your 2025 tax return has been filed and processed. This is the direct link between filing your taxes and protecting your GIS. One action enables the other, and neither is optional. There is also an important relationship between your CPP and your GIS that is worth understanding clearly. For every dollar of CPP income you receive, your GIS is reduced by approximately 50 cents. Seniors with higher CPP amounts naturally receive less GIS or may not qualify at all, while seniors with low CPP or no CPP may receive the full GIS amount. Understanding this relationship is important for planning purposes, particularly if you have not yet made a CPP start date decision and are trying to estimate what your total monthly federal income will look like. The fourth action before April 30th is to confirm that your OAS payment amount is accurate and that any entitlements specific to your age and your situation are properly applied to your file. There are two specific circumstances that affect a large number of Canadian seniors, and both require your direct attention. The first is the permanent 10% OAS enhancement for seniors aged 75 and older. This increase was introduced in July 2022, and it is permanent. It does not expire. As of the current quarter, the maximum OAS for seniors aged 65 to 74 is $742.31 per month. For seniors who are 75 and older, the maximum rises to $860.54 per month. If you have turned 75 and your OAS payment has not reflected this higher amount, that needs to be addressed with Service Canada immediately. Call 1-800-277-9914 and ask them specifically to confirm whether the age enhancement has been applied correctly to your account. Do not assume it was handled automatically. The second situation involves seniors who have chosen to defer their OAS past age 65. Deferring is a legitimate and often financially beneficial decision. For every month you delay starting OAS past your 65th birthday, your monthly payment increases by 0.6%, up to a maximum increase of 36% at age 70. If you have been deferring, confirm through your My Service Canada account that your deferral election is properly recorded and that the enhanced amount is ready to begin at your chosen start date. If you are now past age 65 and have not yet applied for OAS at all, contact Service Canada now. In some circumstances, you may be eligible to receive retroactive payments for up to 11 months of missed OAS, but only if you specifically request it and only under qualifying conditions. For seniors with higher incomes, the OAS clawback thresholds for 2026 are also important to understand, particularly if you are still finalizing your 2025 tax return. The OAS recovery tax begins when your net world income exceeds $93,454. For every dollar above that threshold, 15 cents is recovered from your OAS payment. For seniors aged 65 to 74, OAS is fully recovered when income reaches $154,753. For seniors 75 and older, the upper threshold is $160,696. If your 2025 income was close to that lower threshold and you have not yet filed, speaking with a tax professional before April 30th about income-reducing strategies, such as pension income splitting with a spouse, RRSP or RRIF timing decisions, or charitable donations, may still make a meaningful difference in how much of your OAS is protected. The fifth action is to review your CPP payment for accuracy and to determine whether any additional entitlements apply to your specific situation. CPP increased by 2% effective January 1, 2026. This was the annual cost of living adjustment for the calendar year. Unlike OAS, which is reviewed and adjusted quarterly, CPP is adjusted once per year in January, and that rate holds for the entire year. The amount you are receiving right now should already reflect that 2% increase. The maximum monthly CPP retirement pension for someone who started at age 65 with a full contribution history is approximately $1,300 per month for 2026. The average CPP received by Canadian retirees is considerably lower, typically in the range of $750 to $900 per month, because most Canadians did not contribute at the maximum level throughout their entire working career. There are two specific situations where your CPP may be lower than it should be, and both are worth checking. The first is the post-retirement benefit. If you return to work after starting your CPP and you were under the age of 70, both you and your employer would have continued making CPP contributions. Those contributions generate additional monthly benefits called post-retirement benefits, which are calculated annually and added to your existing CPP payment. If you worked after beginning your CPP and your monthly amount has never increased from its original level, contact Service Canada and ask specifically whether your post-retirement benefits have been calculated and applied to your file. The second is the child-rearing dropout provision. If you took time away from the workforce before 1994 to care for children when they were under the age of 7, those years of low or zero earnings can be excluded from the calculation used to determine your average lifetime earnings for CPP purposes. Removing those years can meaningfully increase your monthly CPP amount. If this applies to you and it was not factored in when your CPP was first calculated, you may have been receiving less than you are entitled to for years. This is correctable. Call Service Canada and ask them to review whether the child-rearing dropout provision has been applied to your CPP calculation. If you have not yet started CPP and are still deciding on your timing, the April 30th deadline makes this a useful moment to finalize that decision. Taking CPP before age 65 reduces your payment by 0.6% for every month before your 65th birthday, for a maximum reduction of 36% at age 60. Waiting past age 65 increases it by 0.7% per month, for a maximum increase of 42% at age 70. These are significant differences. The right choice depends on your health, your other income sources, and your financial situation. A licensed financial advisor or a Service Canada representative can help you model what different start dates mean for your total lifetime income. Before closing, there are two groups of people I want to speak to directly. First, to widows and widowers. If your spouse was contributing to CPP at the time of their death, you may be entitled to the CPP survivor's pension, a monthly benefit paid to the surviving spouse or common law partner of a deceased contributor. This benefit does not arrive automatically. You must apply. The sooner you apply, the sooner it begins. Additionally, if you are a surviving spouse between the ages of 60 and 64 with a low income, and you are not yet eligible for OAS, you may qualify for the allowance for the survivor under the Old Age Security Program. This benefit is specifically designed for people in your situation, and it can provide meaningful monthly income during one of the most financially uncertain periods of your life. Do not wait. Contact Service Canada as soon as possible. Second, to those of you who are enrolled in the Canadian Dental Care Plan, your coverage requires annual renewal, and the renewal window for the current cycle runs from April 15th through June 1st, 2026. However, you can only complete that renewal after you have filed your 2025 income tax return and received your notice of assessment from the CRA. If you miss the April 30th tax filing deadline and your notice of assessment is not issued before June 1st, you risk losing your dental coverage for the upcoming year. For seniors who depend on this plan for routine checkups, cleanings, or other dental care, a lapse in coverage carries real consequences for both your health and your budget. Let me bring all 5 actions together one final time. 1. File your 2025 income tax return before April 30th, 2026. It directly determines your GIS eligibility and payment amount for the benefit year starting in July. 2. Confirm your mailing address and direct deposit banking details with Service Canada before April 28th, when the next payment is scheduled to arrive. 3. Review your GIS eligibility in light of any income changes in 2025. A lower income last year may mean you are now entitled to significantly more than you are currently receiving. 4. Confirm your OAS payment is accurate. Check whether the 10% age enhancement for seniors 75 and older has been applied, and understand the clawback thresholds if your income is approaching $93,454. 5. Review your CPP. Check whether the post-retirement benefit or the child-rearing dropout provision applies to your situation, and if you have not yet made a CPP start date decision, make it an informed one now. None of these steps require legal expertise or financial credentials. They require your attention in the next few days, and taking them means receiving every dollar of retirement income you have earned and are fully entitled to. If you are helping an elderly parent, a grandparent, or an older neighbor navigate their benefits, please share this with them. You do not need power of attorney to sit with someone while they make a call. You do not need to be a tax professional to help them find their tax slips and book a CVITP appointment. The most meaningful thing you can do for a senior in your life this week is help them complete these 5 steps before April 30th. As of April 2026, CPP, OAS, and GIS remain fully funded and fully operational. There have been no confirmed cuts, no reductions in eligibility, and no changes to the age requirements for these programs. Any content claiming otherwise is not based on official government announcements. For accurate information, rely on canada.ca, Service Canada, and the CRA directly. If you have a question about your GIS, your OAS amount, your CPP calculation, or what a surviving spouse may be entitled to, write it in the comments. Every comment is read and every response is given. You are not alone in navigating this, and your question may be exactly what someone else in the same situation needed to see answered. Subscribe for accurate, plain language updates every time something important changes with CPP, OAS, GIS, or other Canadian senior benefits. These programs change throughout the year, and you deserve to know what those changes mean for your income in straightforward terms, grounded in what the government has actually confirmed. This is Canada Pension Vault.